brought to you by Mastery Partners, where our mission is to equip business owners to maximize business value so they can transition their business on their terms. Our mission was born from the lessons we've learned from over 100 business transactions, which fuels our desire to share our experiences and wisdom so you can succeed. Now here's your host, CEO of Mastery Partners, Tom Bronson.
Hi, this is Tom Bronson, and welcome back to Maximize Business Value, a podcast for business owners who are passionate about building long-term, sustainable value in their businesses. In this episode, I'd like to welcome our guest, Joshua Kim. He's the principal at 7A Accelerator. They are a business that helps business owners understand, find, and secure SBA 7A financing. Josh reached out to me recently, and knowing about the recent time-sensitive changes to SBA lending, I preempted some other planned podcasts to get this information out as quickly as possible. It is a crazy time with the SBA lending right now, and we're going to dive deep into it and do our best to help you understand it during this podcast. So welcome to Maximize Business Value, Josh.
Hey, Tom, great to be on.
So glad to have you with us. Tell us about your business, 7A Accelerator.
Yeah. So thanks, again, thanks for having me on. I think that, you've got a great audience, and I hope I'm able to bring value by, everything we cover here. So my business, 7A Accelerator, I identified that there was a tremendous knowledge gap in the general business marketplace about the opportunities that you have with SBA financing. Now, obviously, everyone's hearing about the EIDL loans, the PPP loans, the stimulus specific disaster relief that Congress and the SBA has put together. But what there's a big knowledge gap about is that the SBA has a ton of great loan programs that have been around for 60 to 70 years that are tremendously underutilized. The main loan program they have is 7A, and that's where 7A Accelerator got its name. But what we do is I identify that there's a huge gap in knowledge among most business owners about what you can really do with SBA financing. There's a lot of misconceptions. There's a lot of myths that get pounded in people's head. They hear a piece of bad information from a banker, and they just keep it, and they never bother. So what we do with 7A Accelerator is we educate, consult with, and assist small business owners with getting SBA lending. One of the things is right now, there's about 3,500 lenders in the country that do SBA loans, but really the top 5% of lenders handle north of 50-60% of all lending volume. So that's kind of what we do with 7A Accelerator. We help educate business owners on not only what options are best for their unique situation in their business, but we also help them navigate and find the right kind of lender who can accommodate them, because not all lenders are made equal. And a lot of the misconceptions and problems that people run into are because they're going to the wrong lenders, or they're going for the wrong type of loan for their business. So that's what we do with 7A Accelerator. It's an education piece first, assistance second, in educating and then assisting them in getting the right kind of financing for their company.
I love that. I'm all about education. I'm all about helping business owners understand sort of complex issues. So what is your background, and why did you start this business? Yeah,
so my background, it's interesting. If I told you if I told most people out there what I was able to do with SBA loans at the age I did, they wouldn't believe me. So I actually bought my first 3 businesses with SBA loans at 19 and 20. I bought my first one at 19 and a half. And I bought my second and third one all within about a 14-month span. And I got over $2.5 million in SBA financing to go do that. And, I know this will probably be something that's of unique interest to your audience with, exit planning and, structuring business sales, because one of the great things that you can do with SBA lending is, buy a business. I know bankers, they will not take my call unless I tell them I have a business acquisition that needs a loan request above a certain dollar amount. There are bankers out there, and there are net lenders in the SBA world. That's literally all they do. They do real estate acquisitions and business acquisitions. And so, the process for me to go do that, it took a lot of time. There was a lot of missteps and a lot of bashing my head against the wall. And I was really confused, because I'm like, this is the same SBA lending program. Why are all the banks that I'm talking to giving me a different answer? and obviously I was young at the time. I was, initially when I was trying to get a line up, I was, about to turn 19 and stuff. So it was kind of then I always had it in the back of my head. I'm like, I can only imagine what the average business owner is going through trying to navigate this. I mean, I had a lot more time on my hands because I wasn't running an active business at the time. I had some e-commerce businesses on the side here and there, nothing big, but it was almost a full-time job trying to figure out which end was up. And so obviously I kind of figured it out. I figured out what lenders are looking for what. I kind of cracked the matrix, and I consulted with and helped people on the side here and there, physician friends of mine, other people who needed some capital for a partner buyout here or there, because they knew they could call me and I would basically take 10 minutes figuring out where, where their loan should go, what lender it should go to. And, more recently, I exited my healthcare businesses and I said, I think this is a great opportunity. There's a lot of, like you mentioned in the opening on your podcast here, there's a lot of time sensitive benefits to the SBA 7A and 504 program. We obviously don't help with just 7A. We also help with the 504 loans that are just for real estate to anyone who knows the difference. But, everyone's focused on the stimulus efforts for PPP and EIDL. What they don't realize is the regular loan programs, the flagship loan programs, got, basically shot in the arm with steroids. I mean, they have a huge bunch of benefits, no fees on the front end. The guarantee fees are waived. They're paying a couple months of loans on the front end. The guarantee percentages are higher. So, there's a lot of benefits. So that's really why I started this business. I said, look, I have enough expertise and enough relationships with the industry to where I can help business owners. I can accelerate the time it takes for them to get properly financed because I can help them shortcut the process, educate them with everything they need to know, and then obviously just pair them up with the lenders instead of them taking 3 to 6 months of trying to find who's going to finance their deal and that whole process. It takes me just a couple of minutes because I've been through it before. I've worked with plenty of lenders and I know what everyone's credit box is. So I can, successfully refer a business owner over and make sure they get correctly financed. So
that's brilliant. That's brilliant. 19 years old. I didn't start my first business until I think I was around 23. When I was 19, I had other things on my mind and business wasn't one of them. So
I think I know you were going there.
Exactly. So let's back up and let's talk about what exactly is SBA financing. Are you borrowing money from the federal government and how does it work?
Yeah. So this is actually one of the biggest misconceptions and, understandably so, because it's, there's a federal agency involved. So right now, if you go get an EIDL loan, you're actually borrowing that money straight from the SBA. You go on the online portal, you fill it out, that comes straight from the SBA. And I'm sure there's people in your audience who were able to tap that. I encourage everyone to go online and tap that money because it's 3.75% interest for a for-profit business. And it's a 30-year term. You're basically getting mortgage, real estate secured mortgage level terms for up to 150 grand for your business. It's a no-brainer. So in those cases for EIDL, you are borrowing straight from the government. The way that it works for SBA lending, whether it's 504 or 7A, I'll break down each one. They're a little bit different. 7A is obviously the main program. The lending volume last year was about $25 billion, actually down a little bit from prior years because of COVID. A lot of lenders were more focused on PPP and stuff. But the way it works with the 7A loan is that you will borrow that money from a bank. The bank participates in the SBA's SBA lending program. And so the way it works is, let's say they give you $1 million. You need $1 million to go buy a business or buy real estate, whatever the use of funds might be for your unique situation. You borrow $1 million. In normal circumstances, the SBA, the government, is basically guaranteeing 75% of that loan. So the bank is actually giving you the money, but 75% of it comes with a government guarantee. So in the event that you default on the loan or you have a loss on the loan, the bank is really only out that delta, that 25%. Right now, what I was mentioning about these programs having a steroid shot in the arm, the guarantee percentage is actually 90%. So if you go borrow $1 million right now from a bank, 90% of it is guaranteed from the SBA and 10% is basically, quote, at risk. And I know several lenders who've told me point blank, we are doing deals that we normally would not do because we have the 90% guarantee attached to it. So, it's a great time for people, especially if they've got more risky projects to go get financing. So you're not exactly borrowing it from the government, but there are strings that come with it. One of the things is if you default on it or cause a loss, like you've got to still pay that back before you go get any other federally guaranteed debt. They don't want people who are habitual, loss incurrers to the government. So, that's just something to think about. And then, for the 504 loans, they're a little bit different. Usually the way those work is, because they're for real estate only, 50% of it will come from a bank, and then 40% of that loan for your project will come from what is known as a certified development corporation. Those are nonprofits licensed by the SBA to basically bridge that capital. So either way, you're not directly borrowing the money from the government like you would through the EIDL program, but the government is still involved because they're just guaranteeing it, in the event of their loss, just like FHA loans or any other kind of federally guaranteed mortgage. That's the easiest way to equate it for people.
You're going through a lender. You don't reach out to the SBA in order to get a
Correct.
504 loan. You're actually going through a lender. Okay, so that
Correct.
makes sense. So I've heard lots of bad things about SBA loans. In fact, I've had a bad SBA loan experience myself, which was a little over 20 years ago. In fact, it soured me on SBA. I had gone through the process on the advice of one of my close friends and allies who was helping me with the business, and went through a 7A process with a bank that we won't name. Their initials are Wells Fargo, but had a really, really bad experience there where we were approved. I'd been told we were approved. Everything was about to close, and then 9/11 happened. So it would have been 2001. So 9/11, 2001. And then they denied that, and there was no hope of pursuing it. And I got to tell you, it was a disastrous experience for me. And I didn't look at SBA financing ever again until recently. People like you, Josh, have been educating on it. So
Yeah.
in addition to my own bias against it, I've softened in that quite a bit, of course, as you've helped educate me as well as some other folks. But I've also heard other things, like it takes a really long time. You got to have a lot of capital. It's a complicated paperwork.
Yeah.
Is all that true?
Yeah. So, and this is kind of one of the biggest things we help clear up misconception wise with people. One of the first things I cover in my online course is not all lenders are made equal. And, unfortunately, Wells Fargo does not have the greatest reputation. And I'll tell you why. The banks that are the best with SBA lending are the ones that are hungry. And when I say hungry, they want to make money. They want to make loans. Okay. And so the best lenders are ones that have a vertical devoted to doing SBA lending, because done correctly, SBA lending is very profitable for these banks. They take the government guaranteed portion. And this is more for the nitty gritty corporate finance people who would, be interested in this. But the way the SBA lenders make a lot of money, they take the government guaranteed portion, whether it's 75 or now 90%, and they sell that on the secondary market at a reasonable premium, 10 to 15%, sometimes higher if it's like for a real estate loan. And they sell it on the secondary market. So these loans are very profitable to them. But for banks like Wells Fargo and Chase and Bank of America, what do they care? They're writing $100 to $250 million credit facilities for publicly traded companies all the time. I mean, some banks, their entire SBA division, if you have an SBA division at your bank and you're doing 250 a year in lending, you're probably in the top 20, top 30 SBA lenders in the country. So, for them, it's like, well, are we going to go set up the entire infrastructure needed to do an SBA department, or we just go write, a credit facility for Apple? It's a pretty explainable situation. So, going back to what I was saying, not all lenders are made equal. And I've heard that from a lot of people, like even business brokers that I was dealing with when I was actively buying businesses in healthcare. I had someone actively tell me, you can't buy a healthcare business, a hospice or home health with an SBA loan. And I said, well, I've already bought 3. Like, what are you talking about? And they're like, oh, really? Like, how did you do that? I'm like, well, what you're probably dealing with is you had a situation where the banker, in order to save face, told you, oh, the SBA policy prohibits us from doing this. And unfortunately, a lot of bankers at some of the more unscrupulous lenders out there, they do a tremendous disservice to borrowers and, advisors such as yourself about misinforming them and ill-educating them about what is really going on. And really, they just don't want to tell you, I can't get it approved at my bank. The good SBA bankers will tell you, hey, here's my credit box. Here's what can I approve. If you have something that falls in the box, we'll do it. If it not, I'll refer it out to someone who can. That's what you want to hear from an SBA banker. So, so tell me a little bit more about it. They basically pulled a force majeure clause and said we can't do it because of 9/11.
Well, that's exactly what they said, is that, hey, SBA has stopped financing because of 9/11. The economy at that time. It wasn't true. It wasn't true, but it really agitated me because we needed the financing. And without it, so imagine, if you will, if we transport back in time, 9/11, I had recently bought this business, and I was needing SBA financing to grow, and we had a great growth strategy, and ultimately, when they refused, it almost forced me into bankruptcy, and because it'd been one thing if they'd have said, "Hey, we don't know," but I had been told literally, like on 9/10/9/9, that this was approved and it's just now a matter of funding. And then a week later, a week goes by, another couple of days go by, and I'm calling going, "Hey, what gives?" And my banker said, "Oh, we didn't tell you. The SBA stopped lending, and so we're not gonna."
Yeah. And the thing is, I guarantee you that was frankly, excuse my French, a load of shit.
Yeah,
Because right after 9/11, what were they doing? They were giving disaster loans to people.
yeah,
So,
exactly.
in times of disaster and economic duress, the SBA is usually someone who's out there actively backstopping by lubricating the gears of the economy by financing small businesses. I mean, that's what drives our economy, really. And
Well,
so,
so
yeah,
so if you're absolutely right. But if we kind of break down the answer that they gave, what I heard from them was that the SBA underwriters said this is not financeable. What if they'd have told me the truth that the
yeah.
bank decided not to underwrite this? I could have taken that package and gone to somebody else and probably did it. And what I was left was the misperception that the SBA,
No bank was doing it. Yeah.
yeah,
Well, let me tell you. So that's one of the misconceptions we clear up is the SBA is not involved in underwriting at all for these 7(a) loans for the most part. There are a few exceptions. Most of the lenders out there that participate in the program, they qualify as a PLP. It's basically the preferred lending program. And if they have a PLP status, it means the bank can underwrite and issue the loans on their own. And they just get audited every now and then by the SBA, making sure that the loans they're writing are compliant. They're being made to eligible businesses, all that. But yeah, I mean, what they told you was a total lie. And the SBA's underwriters are not involved. They were not involved in your loan at all. I guarantee you, because Wells Fargo is a preferred lender. So you had it was well within your right and your ability to just go to one of the other 3,500 plus lenders in the country to finance the deal. And there's a lot of lenders that I work with, they deal with situations like that all the time. It can't get done at one bank, so that bank will refer it over. The package is already basically complete, all the documents are there, so they're able to get it turned around and approved in like 2 weeks and closed 2 weeks later. So as far as the other part of your question, does it take a lot of time? What usually holds people up with getting an SBA loan, it's themselves. They're not organized. They don't have their ducks in a row. It takes 2-3 weeks to get their tax returns back from their accountants. It's like, how do you want to blame, how are you going to sit here and blame the bank for being slow when it's taking you 2 weeks to get them basic financial information that you should have on file for your request? It's ridiculous. So,
interestingly enough, that is exactly the thing that causes many business transactions to fall apart, because it's not necessarily the fault of the buyer. They need information. Buyers need information in order to make sure that they're making the right decision and go forward. And when I hear that due diligence drags on and on and on for months, it is 99.997 pure, just like Ivory soap, that it is always the fault of the seller because they can't provide the information that the buyer needs. And the longer it takes you to do that, the longer the process goes. And so I totally get that. This is exactly the same story as selling a business, and the things that we do to help businesses get ready, because the faster you can produce this information, the faster the process
well
goes.
and I tell people, I said, listen, if you work with an advisor, someone such as yourself, who helps prepare the business for sale by getting all that stuff together, you go stick every single thing that the buyer and the bank will need for due diligence in a folder. You can have a term sheet and approval in 2 to 3 weeks, and you can close 2 to 3 weeks after that. But what usually holds people up, it's almost always, and here's the other thing. This is the big thing to think about for for your audience, anyone who's contemplating getting an SBA financing. Keep in mind, SBA bankers, at least the good ones that produce a lot of volume, they make a lot of money. And the reason they make a lot of money is they are getting between 1% and 2% of every single loan they close. So if you're a banker and you're closing $20 million a year of SBA loans, which I think based on Colson Services, they're kind of like they have a study they publish every year with lender compensation and all that. The top 10% of lenders of VPs, business development guys at these SBA lenders, that's how much volume they're doing. And you just do the math. If their bonus check alone is between 1% and 2% of their total loan volume, they're making a lot of money. So when you go to them and say, hey, I need $1 million for my business, do you know what he sees? He asks you the basic questions. How's your credit? How's the cash flow? Okay. If you've got good credit, good cash flow, and the business can support it, all he's thinking about is the next Rolex he's going to go buy with the $10,000 commission check he's like getting from your deal. Like, I'm not going to say that's what it is, but I know these guys, like they have, they have this mentality like, look, I don't want to waste my time on shitty deals I can't finance because, it's going to take me the same amount of time to go get a $200,000 loan out the door as it is a $3 million loan out the door. So do I want, a $30,000, $40,000 commission check, or do I want the $2,000 commission check? So just keep that in mind when you're approaching a lender. Those guys are paid, they eat what they kill. And, for you, you're the, they're a hawk and you're a mouse, so they want to get your deal done because that's how they get paid. So, that's one of the big misconceptions I paint for people, some of the bankers, if they ever hear this, they might kind of begrudge me for giving out the inside scoop, but that's how they get paid.
Hey,
to your other question,
truth. Sometimes the truth hurts right here. So
yeah, it's what it is. But those bankers make money. Those bankers make money on doing the deals. And full disclosure, that's how I make my money. I help structure, advise, and put these deals together. Because there's money in them. So, but yeah. And to your other question, do you need a lot of collateral or cash to get these deals done? Again, a lot of that comes down to it depends on the lender. If you go to Wells Fargo, I'll tell you another nightmare story about Wells Fargo. And of course they don't care. I
feel like we're picking on Wells. I actually have lots of friends at Wells and have money.
I bank with them. They're good for just having a checking account and being able to send wires online. And if I want to go call and yell at somebody because something's not working, that they're great for that. I mean, if you want to go borrow money from them, good luck. Unless, they've got decent credit cards and car loans, but that's it. And anything business related. I have a friend of mine. I'm actually helping him get some financing right now. He's in Vegas. He's got various healthcare businesses across, a bunch of different sectors, PT clinics, DME companies, personal care agencies, you name it. He's involved in it. His top line across everything is probably about $45 million, of which, he's got minority partners in a few of the businesses, but, he's the main guy with everything. And he banks everything at Wells Fargo. So he's got, 20, 30 different businesses at the bank at Wells Fargo. They all see the money coming into his account. They all see how much money is flowing out to his personal accounts. He goes to them and says, hey, I don't want to tie up my personal cash with buying some partners out. I've got a bunch of real estate deals I'm working on. I'd like to be able to take advantage of SBA financing. They looked at everything. They're like, hey, we can give you $300,000. And he's like, I'm sorry, what? I run $40 million a year through your bank. My net income on that's like probably 4, and you only want to give me 300 grand. And they just shrugged their shoulders like, look, this is all we can do. This is what our SBA policies are. And unfortunately, that's how it is with a lot of people. They go to one bank. And the thing is, the only reason that he's actually trying to go do it again, go get SBA financing, is because I happen to be talking about him and he told me about that nightmare situation. I'm like, yeah, they're bad at doing SBA lending. They're going to tell you, I had a bank, I won't name them. They told me something that was explicitly false. It's actually prohibited in SBA guidelines. They told me in order to go get an SBA loan with them, I would have to go get a certificate of deposit for like 100 grand with their bank. Now, it's kind of a technical nuanced thing, but in the SBA policy, it actually explicitly prohibits a lender from basically doing a quid pro quo like that, where they're basically saying, in order for us to give you a loan, we have to have you hold deposits with our bank. They're not allowed to do that. So I actually pointed that out, and I had someone from the SBA email the banker to educate them on that. I've since never heard or responded to any deal I've tried to refer that specific banker, that institution. So I had to go find someone else. But unfortunately, that's a lot of what happens. Most of these bankers, like, if they don't want to do a deal, for that reason, collateral shortfall, whatever, they're going to just kind of like I was talking about before, they're going to kind of just give you some BS answer just to hope you go away and hope you're ill-informed like 99% of the borrowers.
And they are. Yeah,
so, to your other question, do you need the collateral? I guess my roundabout way of answering is no. I mean, I only had about 20 grand in the bank on my first deal when I got $1.2 million to go buy this business in Chicago. So obviously collateral is not a requirement. And there's actually stuff in the SBA. The thing is with the SBA loans, they're required to take a lien on your collateral if it's available, but they are not allowed to decline you solely for the lack of it, provided all the other merits of the request are good. And so that's the thing that a lot of banks don't understand, because yes, they have the SBA program, but they're trying to underwrite SBA loans to their traditional credit box. And that's where people get hung up and frustrated, and they hear all this BS. So, the lenders that really understand the SBA program, they are completely fine doing, uncollateralized deals above $2 million. You're buying a business and the airball above it, less all the assets, the tangible, basically the goodwill, the uncollateralized goodwill across everything is above $2 million. Those deals happen all the time, but it's with a smaller Rolodex of lenders who understand the program very well and understand the nuances of doing change of control deals. They're basically just mini leverage buyouts. That's all they are. So they just have to have people who understand, like, hey, what are all the factors that go into this business continuing to have this cash flow? Is the management involved? The buyer, are they going to be able to maintain it and run it? And, provided all those things pencil out, they'll do the loan. But yeah, they can't decline people solely based on collateral.
Wow. This is a lot of great information. We're going to have to take a break in just a second, but real quickly, what kinds of businesses are ideal for SBA financing, and what kind of maximum amount are we talking about here?
Yeah. So if you're going to go through the 7A program, the maximum amount you can borrow is $5 million. I have some lenders that will do above that. Basically, they'll do $5 million SBA. A friend of mine is getting financed through a lender. I recommended him recently. He's getting $8 million. So he's getting 3 through conventional bank from the bank and 5 SBA. There's only a couple lenders that do deals kind of in that mid range, between lower middle market and SBA. But you can, $5 million is the cap for that. You can go more if you're doing 504. So you can do like an $8 or $9 million project through 504. And the reason is because instead of the government on a 504 loan, like I was talking about, the government's only guaranteeing 40%. So it's not actually based on the max that you can borrow is 5 million. The max amount is, 3.75 million of government guaranteed funds, which is 75% of the 5 million. So you can actually get about 9 million through a 504 project before you actually hit your cap. But really any for-profit business in the United States is eligible, with a couple exceptions. There are some businesses and they have eligibility requirements on the website. You can't be generating all of your income off, like brothels and strip clubs. That's they view those as vice businesses. You can't get SBA financing for those, unfortunately.
And I was all excited. I was ready to go buy a brothel.
Yeah. So, you can't do that. If your business is primarily engaged in money lending, so short-term financing factoring, they don't want that. Or if it's purely speculative, like oil and gas or, trading funds, financial advisors. I'm actually working with a guy. He needs capital to actually go get all the compliance certification, everything done so he can start his own, financial advisory practice. But, I'd say like 99% of businesses out there in the US that are organized and are for profit will qualify. Just a few exceptions. I mean, you can't use it to flip real estate, but if you've got a property management company or you've got a bunch of, vacation rentals, that's different. So, obviously if you've got any questions on if your business is eligible, feel free to reach out to me and I can answer, but I'd say for the vast majority of the audience here that, they're going to qualify.
Awesome. Well, we've got to take a quick break. We're talking with Josh Kim, and we're having more fun than humans should be allowed to have. Let's take a quick break. We'll be back in 30 seconds.
Like it or not, eventually you'll have to come to a point when it's time for your business to transition. Will you be ready? Will you be able to get the maximum value for your business? Brought to you by Mastery Partners, Mastery Class is a 12-month program designed specifically for business owners. We meet once a month as a group to work through our Transition Readiness Assessment. Expand your business toolbox through leadership presentations, have live interaction with other business owners. This program determines vulnerabilities in your business that will affect business value and your ability to transition in the future. Whether that transition is in 2 or 15 years, what you do now has long-term effects on the future value of your business. We have the know-how you need to get the results you want in your business to maximize business value. To learn more and secure your spot in the program, visit mbvmasteryclass.com. That's mbvmasteryclass, mastery with a Y, mbvmasteryclass.com.
We're back with Josh Kim, principal at 7A Accelerator, and we're talking about SBA financing if you haven't figured that out yet. So before the break, we talked about the mechanics of SBA financing. Let's jump into how business owners can use the capital. What kinds of things can SBA financing be used for?
Yeah, so that's a great question. It's one of the main ones I get from people is they want to know, what can I do with SBA financing? What can't I do with it? One of the main things that you can use it for is obviously just any growth capital. If you're trying to buy a partner, if you need working capital expansion, if you want to refinance, higher interest debt, if you need capital to renovate a building that either you're in or you're buying. I'm working with a physician friend of mine right now. They're probably going to end up buying their building, and then they need additional capital to do renovations on it. There's a lot of different options that you can use it with. But the most common things I would say are just general expansion capital, working capital for a borrower that has outgrown their shoes, kind of like what you were talking about before. I mean, you bought a business and Wells Fargo screwed you over on Wells Fargo screwed you over on the, on the working capital project. But, working capital is one of the biggest things that I see a general need for. And I tell people SBA is great for it because it's going to be, if you just need a short-term loan just to, cover bills for a little bit, SBA is, it takes a little bit of time to get it. Obviously, it's not going to be one of those things you get turned around in 72 hours, but it's by far the cheapest and best long-term capital solution for your business. So, if trying to buy a business, buy out a partner, you just need growth capital, working capital. And obviously there's a million things you can do with real estate, buy real estate, provided it's for your business. It can't just be a pure investment property. But yeah, I mean, pretty much anything in your business that you would need capital for, this will cover. They also do finance. They also do finance startups, franchise startups and this and that. But the nuances of that are a little bit trickier because the bank obviously wants to make sure you have the experience and the relationships in that industry to make that work.
So I've got, in fact, when you're talking about this, it brings up a couple of questions. Then I've got a couple of clients right now that are in kind of partnership arrangements. One of the partners wants out and the others want to stay. And let's just, for the sake of argument, let's say we've got 4 partners. They're all 25% owners. And of course, the proposal would be, okay, we establish the value in all the 3 other owners, write the guy that they're buying out a check for the value. Is that something you could use SBA financing for?
Yeah. So partnership buyouts are actually a great option. So walk me through it. There's how many owners now? There's 4 and they want to buy one guy
just
out?
For the purpose of this example, let's call it there's 4 owners and they're each 25% owners, but one of them wants out. And so that'll leave 3 at 33 1/3 each.
Yeah. You could use 7A for a buyout like that. And the thing is, lenders really like partner buyouts because, one of the main risks they have in a change of control in a business is if the management styles of the new owners don't match the old owners, key salespeople leave, that can obviously create issues. So, one of the things that they really like to see is that it's okay, well, hey, there's going to be continuity here. So yeah, you could definitely use 7A for a partner buyout like that. Obviously, all 3 owners, the new pro forma ownership structure would have a third, and a third. So they would all, obviously one of the things, anytime you go borrow money, regardless if it's SBA or not, 20% or more that's the threshold that the bank wants to know who's the owner, because that's where they're asking for the personal guarantees for and stuff. But but yeah, in that case, it would be a perfect situation. Probably just want, it would be much more efficient use of their capital to do that than it would to, use their own cash. So that's definitely
that's the point I was making. You don't have to then dip into your own personal savings account to write this. If you can get that financed then the business is actually borrowing that money and paying back that money, then the other owners don't have to actually come up with that capital if they can get it financed that way. That just
correct.
Makes a good sense to me. So
correct.
So I've heard you say before, SBA loans are great for business acquisitions below the $8 to $10 million enterprise range. So now if they're only going to loan up to 5 million on 7As and 8 to 9 million on real estate, How can they be a great vehicle for acquisitions below the $7 to $10 million range? And then why is the opposite true? Why would they not be a good vehicle over that range?
Yeah. So the reason SBA loans are great is because, below, what you'll find is if your business hits that critical mass of about $3 to $5 million of EBITDA, you can really start borrowing at an institutional level purely based on cash flow. They don't base it on, the owner's personal net worth and this and that, because the business itself, once I guess bankers have kind of figured out over time, once it hits that dollar threshold, it's going to be stable on its own, right? So the reason that SBA financing is great for numbers below below the $8 to $10 million range is because a lot of these bankers, they're not going to, the issue that they run into is, it's just a cash flow equation, right? They have concerns about, cash flow and viability of these businesses below certain, EBITDA number. And so by having SBA involved with with the government guarantee and everything, it really alleviates the risk to the bank, because now they're going in and basically saying, okay, we know that the government's going to be guaranteeing 75% of this loan. The cash flow looks good. The cash flow looks strong. And that's why it's a great option. And I really hate to characterize it as such, but it's a great option because, if you go through any other conventional financing, mechanism for most of these lenders, they're going to want like 40% equity into the deal. And, they're going to want, collateral coverage for this and that. So, a lot of it comes down to part of it's like, that's just how banking regulatory is. They have to, they're subject to certain rules, what they can and can't do, with stuff. So, you got to keep that in mind as well, that, they are subject to certain laws around, unsecured debt. Right. But with SBA, it's great because, the government guarantee is a credit enhancement that's strong enough for them to be able to get around some of those issues. So it's really overall, it's just a great option because it allows these lenders to minimize their downside risk while being able to still take part in deals like this. And that's really why the SBA is around, because there's this gap of what banks can do below a certain dollar amount, unless they have significant collateral or credit enhancements behind it. They wouldn't be able to do these kinds of deals without the SBA guarantee behind it.
Awesome. So as I set up this podcast at the beginning, our audience heard me say that I preempted other podcasts in order to get this information out because it is time sensitive. So we've already talked, we've danced around some of this in the answer to other questions, but let's get real clear. Why is now the best time to borrow through this program, and what incentives are in place now that normally aren't there?
Yeah. So normally, I think I touched on them earlier, but normally you've got a 75% guarantee versus a 90% guarantee. That's not directly a borrower facing benefit, outside of the fact that it will make your deal easier to approve if it's one of the ones that's kind of shakier on the fence that the lender wouldn't normally do. I was working with a guy just the other day. And they've got a lot of cash to go into the project. They were just looking to tap SBA financing to, possibly keep more cash in their pockets. They needed to, their total project was about 700, 800 grand. They were going to go renovate a place out, turn it into, a new salon concept. Big place. They got a great rent credit from the, from the landlord, all that. And for them, they kind of were of the impression like, hey, it's going to be better for us to, tap it. But the lender that I introduced them to said, hey, normally we wouldn't do a project like this, but because of the fact that we have the additional credit enhancement with the SBA guarantee being at 90%, we will look at this project. And so, that's actively what they're doing. They are actively working with, they're actively working with them right now, trying to get that finance. So that's one of the big benefits. The other thing too is normally when you get an SBA loan, the way that the SBA doesn't lose a ton of money every year is every loan they issue, they normally charge between 3.5% and 3.75% as a guarantee fee. That gets lumped into the loan, and obviously you're stuck paying that off over time. But they're waiving that right now because they want to encourage more businesses getting capital so they can provide jobs to help curb the unemployment. It's just part of the broader stimulus efforts. So that's a fee you don't have to pay. So that immediately saves you almost 4% off the bat. And then right now too, they're also paying the first 6 months of the loan for you. So if you have
they're not just delaying that; they're actually paying the first 6 months of the loan.
They are actually paying the first 6 months of the loan for you.
Wow.
So that's a big that's a big that's a big thing right now for a lot of businesses, is that you've got the opportunity to and kind of one of the emails that we've been sending out to people that a lot of them are interested in is the government will pay you to borrow money. And it sounds ridiculous, it sounds corny, but when you break it down, that's actually what they're doing. They're basically paying they're subsidizing the first month, not just the interest, the principal and interest. They're paying the whole payment for you. It's up to $9,000 per loan. So obviously you can't go just pull $5 million, have them pay and then return it.
Up to $9,000 in monthly payment, you're saying?
Correct. So if your monthly payment is 10 grand a month on your loan, you're still responsible for 1,000 of it, but they're subsidizing 9 grand of it up to 6 months.
So you're still going to get $54,000 in benefit there.
I will caveat that is subject to availability of funds, and the SBA was very clear on that. If money runs out before then, they're going to keep an eye on it. My personal opinion is I think if the money does kind of run out for that unique benefit, they're going to go out and they're going to go out and lobby Congress to go get more funding.
Now, so will that? I mean, you won't get 3 months into it. You're getting loan or basically payment forgiveness. And then for the last, you'll know at the beginning whether or not.
You'll know when you apply for your loan, if they're going to give you the full 6 months, or, they are talking about possibly cutting it down to 3 if funds aren't available while they go lobby Congress. But we'll see what comes of it. I frankly think that if there is an issue with capital availability for this part of the program, I'm pretty sure that they would just go to Congress and lobby for more, because it's only going to be probably $2 or $3 billion in the grand scheme of things. Biden's talking another $1.9 trillion stimulus package. It's such an infinitesimally small drop in the bucket. It's not going to matter.
Yeah, totally. So these are lots. So that even makes this more time sensitive. So the sooner you can get in line, we know that the more likely you are to get that incentive, even if we think that it's going to be extended. So that's why I say that's why I've preempted some other stuff, so that we can get this information out, because it is so very important. Where does SBA line up in comparison to kind of other financing options then?
Yeah, so I would say, I mean, really, when it comes to getting financing for a business acquisition, if you need more than $500,000, there really is nothing to compete with it. So obviously I know a lot of folks in your audience, they're probably existing business owners. They're contemplating an exit at some point. Some of them are probably still growing their business, but I mean, they probably get hit up all the time by, people calling them from New York, hey, we can offer you express, working capital lines of credit. They just want, your bank statements, your last tax return, run your credit. But those loans, you're paying 16%. They've got daily paybacks. They've got all these fees. Once you add in all the fees, you're really paying like closer to 30% interest. They're just, they're fucking sharks. So what I would tell people is, it's just the cheapest capital, because it's got a government guarantee behind it. There's no way to explain it any more simply than that. You're not going to get better terms than a loan that's guaranteed by the federal government. And that's just a fact of life here. So, what other options do you have if you want working capital? Yeah, there's other options out there, but when you really break it down, what other options are there that are actually competitive with SBA financing? Nothing. There's really nothing out there that's going to be anywhere close to competing from a rate and term standpoint. SBA 10-year loans are the norm for regular 7A stuff. You can go for between 10 and 25 years. All these other short-term working capital loans, they're what, like 8 to 17 month payback, like really odd, weird numbers.
Yep.
So you're not going to get anywhere. You're not going to get anywhere close to the terms you will with an SBA loan by going with one of those online shark lenders. So what other options are there too for partner buyouts? Really, there's really no other options out there for partner buyouts for people. If you need to buy out your partner, not a lot of lenders, not a lot of financing institutions that do other types of financing are going to be able to help you. And so that's why, and it's funny, I'll tell you, the first business I bought, if it was actually owned by two guys that were having a dispute. One wanted to sell, the other didn't. So if the guy who didn't want to sell knew about how to leverage SBA financing, they wouldn't have sold it to me.
Yeah.
So, and it's one of those things where it's like, that's why I'm trying to put this out here, because I'm sure there's a lot of business owners where they're in their shoes. They don't like their partner. They're having disagreements on the direction of the business. And, they just want to be done with it. And they just want to, they want to find some way to buy their partner out, get the partner out, whatever the case might be. And SBA is a great option for that. But again, that's why we're doing what we're doing, educating people about it. Because if you're in that situation, you call me, I'll ask you very high level questions, 10-minute phone call, and I'll be able to structure the entire. It'll probably only take about an hour of working with me to walk through the numbers, structure the buyout, do everything, find your lender. And, the equity value to whoever is able to benefit from an SBA loan, it's, hundreds of thousands at minimum, if not millions of dollars over time. It's just such a shame that not a lot of people know about, these financing options. And that's why I'm doing what I'm doing with 7A Accelerator, because I know there's plenty of people out there who don't know what they could be taking advantage of.
Well, I think that that's really kind of the answer. As you're talking, I'm thinking then I wanted to ask, why would it make sense for somebody to work with you as opposed to trying to go to figure out all this stuff on their own? Why should they work with somebody like 7A Accelerator?
Yeah. And I tell people very, very much up front, listen, if you know how to go get financing from a bank, I'm not going to be able to bring you value. You've already been through the process, you know how to do it. But, and the other thing too, is sometimes if lenders know that you are shopping the deal to two other lenders, they're not going to stick you on on the proposal they give you. They're not going to stick you with the maximum interest rate. It's prime plus 275 is the maximum they can charge for a regular 7A loan, right? And unfortunately, most borrowers, it's like shopping for a mortgage. Are you going to go take the mortgage offer from the first bank you talk to? No. Oh, I mean, obviously some people do, but you shouldn't. You're doing yourself a disservice. You could get a better offer somewhere else. Anytime you go car shopping, house shopping, whatever you're looking for, you're going to go look at options. And so, so one of the benefits of working with someone like me and my company is anytime I'm referring a deal out to a lender that's coming from us, they know to give a competitive offer. They're not just going to stick you with the highest rate, right? So, there is that benefit, but, really the benefit to most business owners is they're busy. They're busy running their business. They have a great realm of expertise in running it, and they don't have the time. I would estimate for a business owner who doesn't know anything about SBA financing to try and go out there and get $500,000 to $1 million for their business. It's going to take them 30 to 40 hours of their time talking to the wrong banks because they don't know where to start. What do? You call Wells Fargo, you call your local bank. They're going to get the same treatment that you did back in 2001 with your situation. They're going to get fed a bunch of crap information. And, it's just going to be a big waste of their time. So working with someone like me will save you a lot of time because I know, I'm going to know who finances what kind of projects, and, the time savings for the average business owner could be tremendous. So that's really where the value is in working with someone like me. I'm going to save the business owner a lot of time by making sure they're working with a qualified lender to start, as well as we're going to make sure, the loan requests or the loan proposals that they're getting are actually competitive. So, obviously we're catering to the people who are busy running their business and they just want someone to come in, take the, several years of experience. I look young, I'm only 23, but I've been doing this since I was 19. So I know a good bit about it.
So all this was happening with me with Wells Fargo back in the SBA time when you were probably still, like 3 years old or something. So
yeah, I was
around then.
I remember 9/11. I was in Colorado at the time. My dad was teaching at the Air Force Academy. My dad's Army by background, but he was teaching at the Air Force Academy. We were living in Colorado at the time, and I do remember it. But yeah, I mean that's the benefit of working with someone like me. I have a Rolodex of lenders. I know what credit box each lender has. I know what lenders, what can be done and what can't be done at individual lenders, and the amount of time that will save, you, the business owner, someone who wanted to reach out and possibly work with us. It's huge. So that's really where we truly bring value. is by being able to save the business owners time and make sure they get a competitive offer on financing requests for their business.
It pays for itself. It really does pay for itself. It makes sense to me. One last business question, because we're going to have to run here in a second. This podcast is all about maximizing business value. So, Josh, what is the one most important thing you recommend business owners do to build long-term sustainable value in their business?
Yeah, that's a great question. I'd say one of the things that if you're contemplating an exit and you're wanting to sell it within the next 2 to 3 years, one of the things that I can definitely recommend, and I'm sure you tell all your people this too, as they work with you, Tom, stop running every personal expense of your business. Because when it comes time to going to the lenders, SBA lenders, they understand add backs, but if you go in there and you're like, yeah, this is my personal cell phone bill. Here's $400 here, $200 there. The SBA bankers, they just kind of roll their eyes. They're like, look, what are the top 3 add back categories that we can actually verify? Your personal travel, meals out, that's about it. If you're running your car, if you're running every little aspect of your life for your business, okay, great. I get it. You're going to go from a taxable liability of $600,000-$700,000 a year, maybe down to 300. Okay. But what that's going to do for you on the exit multiple is you might lose a whole multiple in earnings on the exit. So, for the 2-3 years before selling your business, keep really clean books. Obviously it's okay to have an add back here or there, but make sure you can just break it down into 1 or 2 clean categories. It might be even cleaner to just set up a separate management company, quote unquote, and then just, take $20K a month out of your main business, pay your management company, and then you can run whatever the fuck you want out of your management company, because then it's easy for them to see, I have a management company, covers all my personal expenses. And that's an immediate $20K a month they can add back to cash flow without having to, do too much financial maneuvering. So that's definitely a tip I would have for people.
I think that is a great tip. I call that adjustment fatigue. Buyers and bankers get adjustment fatigue. So those are some great tips in there.
Yeah.
But you've made it all the way to the last question. And everybody listens to this podcast in order to get to this question. So here it is. Your bonus question: what personality trait has gotten you into the most trouble over the years?
That's a good one. And full disclosure, guys, he sent me this question ahead of it and ahead of the
interview. Spoil it for him. Come on, they all think I spring this on you.
Yeah, no. Well, frankly, even though I spent a whole day thinking about it, I think the biggest personality trait for me is that I'm very confident in my area of expertise. And so sometimes to some people that can come across as kind of like asshole-ish, I just tell them like, look, you're full of shit. You can't do this. And it's like, okay, well, why is this kid telling me I can do this? And it's not because I think I'm that much smarter than anybody. It's just like, I know what works and I know what doesn't work because I deal with it all the time. And so I've rubbed some people the wrong way, especially business brokers. I've pissed off a lot of business brokers because they're like, they sit there, they give me their spiel, because I'm looking at buying a business one. And I say, look, they're like, I've been doing this 20 years. I've been doing this. I'm like, look, I don't give a shit. Look at the numbers. I look at the numbers. The numbers are full of shit. I tell them the numbers are full of shit and I tell them why they're full of shit. And then I tell them, the broker, why they're full of shit. And then they don't like that. I'm like, listen, your whole thing with adjustment fatigue, you're trying to tell me this guy, how are you adjusting it from a negative 56 grand a year on his tax return to plus 700K, and you want me to pay $3 million for this thing? It's worth 500K, but they don't like to hear that because they don't make money on that. So, I'd say that's, I don't know if that's necessarily gotten me in trouble per se, but it definitely has not contributed to.
It hasn't made you very endearing to some.
It doesn't make me super endearing to some of these business brokers, but again, I don't care. A lot of them are just, a lot of them are really kind of crooks, and it's not my favorite thing.
Well, we do know some really great ones, but I agree that there's certainly some challenges out there. How can our viewers and listeners get in touch with you, Josh?
Yeah, so I know that we'll be putting we'll be putting a link in the podcast description. You can kind of find me through my site. You can reach out, try to book a call if you think that working with someone to help you raise the capital would be of benefit to your business. I've got our national Rolodex of over 100 lenders that I talk to on a frequent basis. I know what they can finance, what they can't. So obviously reaching out through our website would be great. My email, we can put my email in there if you want to reach out to. If you've got an immediate or near term or even more of a long-term financing need. I know, Tom, we were talking before the podcast about, you've got a couple guys you're working with right now, and it might be good to get their business looked at by some of the bankers. Just get a just get evaluation, an evaluation put on it. So yeah, we'll put all my contact information in the description below. Obviously, you can reach us through the website, 7aaccelerator.com. I've got a ton of information on there now. I'm still adding more as we go because I'm trying to take some of the case studies of people that I've worked with and actually put case studies on there and show them what we've been able to do. But yeah,
we don't normally do this, but we're going to put a link directly to the 7A Accelerator right on our website. So you can, if you happen to download the podcast from the website, then you can go right to the website, get the link, and go straight to 7A Accelerator. Of course, all the other ways, but we're committed to doing that because this is so time sensitive and so important for folks to take action on it now. So thanks, Josh, for being a great guest and taking the mystery out of SBA financing for us.
Yeah, glad to be on the podcast. And anytime, to anyone listening, if you guys have questions or you just want to explore, feel free to reach out and we can definitely see where we can help you. But I was telling Tom before we got on the podcast too, I think that if every business owner really truly knew about, how great SBA financing was and how to navigate it, the lending volume nationally would be 10 times what it is right now. It's just such a superior financing option for any need in your business compared to anything that's out there. But what trips people up on trying to go for it is they just don't know where to start. And that's why I started this business. We want to put as much information out there for business owners on, hey, we're going to break and, we're going to shatter all the myths for you. We're going to show you what you really can, accomplish with it. Obviously help everyone and, help everyone and anyone get the capital they need to do what they want with their business. Because, for us, the more successful case studies we can have about, working with people, getting them the capital they need to scale their business and what they, on whatever they would need to do, the better it is for us. So
it's brilliant. And I am so glad that our paths have crossed. You can find Josh at 7 Accelerator. That's the number 7 accelerator.com. You can find him on LinkedIn. And of course, we will put a link directly to it right on our website. So you can go right to our website, masterypartners.com. And of course, you can always reach out to me and I will be happy to make a warm introduction to Josh. This is the Maximize Business Value podcast, where we give practical advice to business owners who are passionate about building long-term sustainable value in their business. Be sure to tune in each week and follow us wherever you found this podcast. And be sure to comment. We love your comments and we respond to all of them. So until next time, I'm Tom Bronson, reminding you to take advantage of some great deals on financing from the SBA while they're here, while you maximize your business value.
Thank you for tuning into the Maximize Business Value podcast with Tom Bronson. This podcast is brought to you by Mastery Partners, where our mission is to equip business owners to maximize business value so they can transition on their terms. Learn more on how to build long-term sustainable business value and get free value-building tools by visiting our website, www.masterypartners.com. That's master with a Y, masterypartners.com. Check it out.
That was perfect. I wouldn't make any changes on that.